Hi, it's time for my April Greater Sacramento Area Duplex Market Update and Trends Analysis. In this video, I'll cover the key statistics and trends that are currently developing in the Sacramento Duplex market. This will give you a competitive advantage in spotting early signs of a changing market because market changes leave evidence. We will look at all the key local trends and touch briefly on the national trends, including some disappointing inflation numbers that just came in. These will affect the local duplex market over the next few months. If you watch this report monthly, you will definitely see the emerging trends long before most of the people in the market do. And this will definitely give you a competitive advantage. So let's get started. This report is for the month ending March of 2024. This month, we are in a seller's market for duplexes in the greater Sacramento area. These next few statistics are very interesting. The number of duplex listings in March was up 60% over last year at this time, but a huge 81.8% spike in pending sales, which is currently the highest level in about 24 months, reduced the active inventory by 23.1% compared to last month at this time. The current pending sales are more than double the amount of pending sales in January. So what the heck is going on here to cause such a huge spike in pending sales activity? In previous months, I've mentioned that the market will often react to significant changes in the interest rate between 30 and 90 days after those changes are taking place. Often we will see a dramatic drop or increase in pending sales within 30 days of a significant interest rate change, and in closed sales between 60 and 90 days after the changes of the interest rates, due to this lag effect of how long escrows take to close. So you will see in the current rate trend chart that rates were at a 16-month low around the beginning of January of 2024. For most of January, rates were going up, but after several weeks of rates going up, they seemed to be peaking. And then we started to see a slight downward turn again. This combined with reports from the Federal Reserve at the beginning of March. The interest rates were unlikely to come down as fast as most people had anticipated that they were going to earlier in the year, caused many people who had been waiting to jump into the market when they saw a slight dip in the interest rates. What this means is that the market does not like the prices of much of what is on the market presently. No matter what levels the inventory are at, there is a price point where buyers just won't buy it because it just doesn't make sense. And that is the constant game of chicken being played between buyers and sellers and how much the average list price is and average sale price. We'll cover that a little bit more detail in just a second. The average sale price compared to the original asking price is another statistic that gauges the strength of the market. This month on average, duplexes were selling for about 2% less than the original asking price. This is 1% less than last month at this time. This makes a bit more sense when we look at the average list price compared to the average sold price. You will see that the bottom line is the average sold price. Now take a look at the average list price. You will notice the start of a disconnect between the buyer and seller expectation, or what I call the alligator trend, when the list prices are going up and the sale price expectations of the buyers are going down. It signals a resistance point in the market where, for buyers, the price just doesn't make sense any higher, but where many of the sellers are still asking for higher and higher prices. Many agents and sellers do not understand that the new pricing dynamics since rent control laws were passed for small multifamily properties means that the comparable sales are much less important to investors than the income numbers. So in plain English, many sellers do not understand that they cannot sell a duplex with low rents for the same price their neighbor did down the street recently with one that had much better rents. For much more detail on these concepts, buyers should watch my video on analyzing investment properties, and sellers should watch my video, Seller Avoiding the 9 Critical Mistakes. You can see links to these videos down in the description below. The last chart I want to look at is the month supply of inventory. The huge spike in pending sales has caused the month supply of inventory to fall to only 1.5 month supply. This is down 42.8% from the month before, but it is still an increase of 7.2% compared to last year at this time. So what does all this mean? I believe we've reached the point where none of the active inventory will break even with 25% down. I believe this is a major potential tipping point in the market, and that there will be increasing resistance to higher prices without interest rates coming down. And now that we know that the Federal Reserve is unlikely to lower rates in the next few months, in fact, more than likely rates will probably be going up, it's going to be very interesting to see how this supply and demand battle between listings wanting to go higher and buyers wanting lower prices will turn out. It's impossible to know how this will turn out for sure, but my expectations are over the next few months that we'll be seeing an increase in inventory of duplexes, and we will see pressure on prices to start coming down. For buyers, my recommendation would be we should be making offers based on where they make sense on properties that have been on the market more than 30 days. For sellers, now is the time to make sure you are using the income approach in setting your price. What are you seeing and feeling about the economy? Please comment below, but please, let's not turn this into a political debate. I just want opinions of what your perception is of what is actually happening out there or what you are hearing and seeing. The Fed is targeting a 2% inflation rate. So as we see those inflation reports coming out, if the inflation number is above 3%, don't expect to see rate cuts. Once that number starts to come in below 3%, we're likely to see some easing of rates over time. Unfortunately, the March inflation rates just came out at 3.5% rate of annual inflation. This is up from 3.2% the month before. So what this means, I would not be expecting any significant decrease in interest rates in the next month or so. If you've been waiting for rates to come down to buy, significant rate reductions are just not likely to happen over this next 60 days. I'll be watching the inventory growth, the amount of pending sales very closely over the next 30 to 60 days to see whether that disconnect between the buyer's expectations and the seller's expectations continues to widen, or if one party blinks. If you want to keep up with everything about buying and selling investment properties, please subscribe to the channel. And as always, I'm available to talk to you by phone, text, or feel free to schedule a Zoom call using the QR code at the top of my page or the link in the description below.